Welcome to Markets Now. I'm Michelle Rook with Naomi Blohm, Total Farm Marketing. Well, we ended on Friday with just about everything lower except for, I believe, HRW wheat and hogs, interestingly enough. But Naomi, when you look at the weekly closes, grains, all in negative territory. Is this market starting to roll over? Do you think these grains are take some weather premium out or not?
It feels like it's doing a warning shot just to remind us that the crop is getting planted. It's not perfect. It's not perfect conditions, but it feels like maybe the traders are starting to just be thinking, hey, there's rain, the crop's going to grow, the farmers will get it planted in the ground. And so the market posting bearish reversals, weekly bearish reversals for corn and beans is something that we should not ignore. Now, in the same token here, we do not have the crop fully planted yet for corn or soybeans. So there is still reason why market prices can have a recovery bounce higher into June. There is so much weather we need to trade yet. We have a USDA report coming up on June 12th. We are still hearing that the Brazil soybean crop is much smaller than what the USDA is accounting for. And the thing about soybeans is that we're going to be coming up against their final planting dates here too in the coming week. We just finished the final corn planting date with May 31st. So we're going to want to see how many acres yet need to be planted for corn and beans and where in the countryside that's located. The weather still isn't wonderful. We've got more rain in the forecast. Temperatures are cooling off a little bit in some parts of the Midwest, and it's not a perfect start like maybe some of the traders are trying to anticipate. Now, the one thing I would really, focus people to remember on, whatever kind of a recovery bounce we might get out of this, take advantage of it and be really thinking about your cash marketing and then how you can be thinking about protecting on price bushels as well.
Yeah. From a chart perspective, I know you have pointed out that we did kind of run up into chart resistance this week. We were probably a little bit due for a correction here, weren't we?
Right. And so we saw corn and soybeans both start the early week session right up against resistance levels, but then we didn't have enough fresh news to get through resistance on daily charts. So we saw the profit taking correction kick in, which I think at this time is just that, a correction. Prices for corn did close below the short-term uptrend that we have been in, but if we can get some friendly news to emerge early next week, we can see the market have a nice recovery bounce heading into the June 12th USDA report, where again, every line item is going to be scrutinized. And, demand overall, we saw ethanol demand this week pick up again. Exports overall, we know they're not fabulous, but they haven't been horrific either. So there's just some elements of hope, and we have to just, again, make sure that whatever type of price recovery rally we see, we're taking advantage of it with cash sales, and then thinking longer picture how to protect unpriced bushels as we get into the rest of summer.
Mm-hmm. So what's your take about how much weather premium we need to have in the market right now? It looks like we're getting planted when you look at the national average, but we still have some problem areas out there. And then we get crop ratings on Monday. And so the market, what is it looking for?
I think we've taken all the weather premium out. I think there's this assumption it's going to be wonderful and the crop is going to be a record. And it's too early to assume that, just because the crop is in the ground, we still have, of course, plenty of summer weather to get through. And I've heard from producers who are saying that the early emergence has not been wonderful. They're a little nervous about it. There's places that have to be replanted within fields. So things, again, not perfect by any means. And the market, I think, is going to respond to that because, again, we don't have the weather premium in this market anymore. So if something comes to light, the market's going to be ready to respond.
Yeah. What about wheat? It looked like we had rallied, putting weather premium in either from a US or a global basis. But do you think that we have priced most of those concerns into that wheat market now?
For right now, much of the concerns have been priced in. I think we've priced in the Russian smaller production overall. We know that things aren't perfect around the world. So that was why the market was able to push higher. But we did, again, going back to the charts, we hit some overhead resistance levels. The fund said, hey, maybe it's good enough. We're going to put some profits on the books into the end of the month of May. So we saw them sell off some of their positions. So going forward during June, what we're going to wanting to be watch is how are global exports going? How is global demand? I do know that it is still supposed to be hot and dry over portions of Russia. So that might be something that could lend support down the road. But the wheat market had one heck of a run higher. So it also is likely due to see a little bit of a pullback or correction here in the short term, which is, I think, what we had this past week. And now all eyes will be instead focused on the June 12th USDA report.
Yeah, that. And do you think we're going to get now a little harvest and hedge pressure here as we kind of start moving those combines up north? Or
that definitely is something that is going to be on traders' minds. We're going to want to be hearing and watching how the yields are, not only here in the United States, but then we're going to be focusing on Canada as well. So we do want to keep an eye on that. The hedge pressure is there seasonally. Sometimes wheat has a tendency to have its seasonal price correction lower, maybe a little bit before corn and soybeans. So maybe we're seeing some of that as well. But what we'll want to see is for sure how yield results are, and then keeping an eye on global weather as well.
yeah. So we talked about the funds. What do you think their next move is? You know, they peeled out of a lot of that short position they had in all the grains. You know, do they stay? Are they comfortable right now? I guess maybe is a good way to put it.
Well, here would be my best guess is that now that they have squared up positions into the end of May, maybe they just hang out and be a little bit quiet and not do too much trading action for this upcoming first week of June. There's a couple things to watch, not only weather and, of course, the June USDA report, but the Fed meeting is going to be occurring. And so we're going to be wanting to see what the Fed commentary is, because that, of course, affects interest rates, inflation, all those types of things. So the Feds are as big of a piece of the puzzle in this as well for what the funds might do and if they want to become buyers or sellers in the marketplace. Because, of course, they're in it to make money. And if there's a different avenue where they can make money, they're going to go for it. So plenty of things to be watching. There's a G7 summit coming up. There's a peace summit coming up in Europe as well, along with, you know, these global wars that continue to wage. So I don't think we can just say it's a slam dunk. Markets are going to go lower from here. There's too much at stake around the world globally.
No doubt. What about this cattle market? We did have a correction this week, and we corrected before the cash moved lower. But do you think we have a bigger correction in store? Was this healthy?
Good point about it's like the futures market kind of dictated price movement for cash. To me, it feels like when I look at the charts on live cattle and feeder cattle, there's a really big pennant flag formation forming. And we hit the high end of resistance on the charts earlier this week. Last week's cattle on feed report wasn't enough to take us through resistance levels. So we started to see some profit taking kick in. This upcoming week, I feel like prices, of course, are going to be watching what cash markets are doing, what the box beef values are doing. But if we don't get any fresh news, we might see live cattle and feeder cattle prices just kind of continue to trade sideways to a little bit lower. There is room to go lower on the charts. And we might see that because the day traders are watching it. Everybody in the industry is watching it. So from a technical perspective, it's like a target or a mission that the market might want to go to. But we are still so fundamentally well supported because we are dealing with tight supplies. Beef demand domestically, in my opinion, I think is still okay. And globally, though, that's the thing where we're going to be watching. We had our weekly export sales this week come in about 25% lower than the week prior, but we still had our regular customers buying beef. So there is demand that's there, and we just needed to have this little bit of a correction as the market now waits to catch up to see what the actual fundamental news is going to be over the next coming couple weeks.
Yeah, and futures are at a good big discount to the cash, so that should be somewhat supportive, shouldn't it?
Right. Yeah, totally agree with you. And then seasonally, there is a tendency for the live cattle prices and even feeder cattle prices to work a little bit higher during the month of June. But it feels like we needed to get this correction out of the way first. And then again, we'll be taking cues on actual cash markets, actual beef demand, box beef values, and the regular fundamentals will start to take over soon enough.
Okay. Well, great to talk to you as always, Naomi Blohm with Total Farm Marketing. That is Markets Now.